Good evening. Thanks for joining us. This is NTD Business, and I'm Paul Graney. We talked to CEO and Fed hawk Danielle Dimartino Booth, who's on the ground in Texas. She says it's a humanitarian crisis. Gamestop Saga key players testify in front of lawmakers today. None admit wrongdoing, but they all agree they've never seen anything like it. And Treasury yields continue to rise. Will the Fed step in to keep money cheap? If they do, it could hurt the economy long term. I plan to talk to the CEO of Quill Intelligence, Ms. Danielle Dimartino Booth, about the FHA mortgage market today. Pretty standard. But when she got on the call, I realized she was in Texas. She says it's a disaster zone. I asked her just how bad things are.
Well, it's fairly difficult to describe what has happened in Texas. Being here on the ground, there are countless families who have lost everything. The lack of infrastructure investment over the past several decades has really come back to haunt the state that is the 11th largest economy in the world. It contributes 8.5% of U.S. GDP. To put that in perspective, the New York City is about 9% of U.S. GDP. So, but Texas is a massive economic growth machine, largest exporting nation. I mean, to have 40% of oil production come offline, and we're not sure when everything's going to be back up and running in full again because we don't know what the thaw of this massive frigid air system is going to, how the thaw itself will manifest. But on a personal level, I can no longer count on both my hands the number of people whose homes have been destroyed. The insurance claims are going to be going on for years into the future. So this is the economic devastation is I can't put into words.
Wow, that's incredible. We aren't really hearing so much from on the ground in this perspective.
It's interesting that the media is focusing more on kind of the movement in natural gas prices, the movement in crude oil prices, kind of the pure markets story when an economy of this size that has literally been frozen. I mean, public schools have been closed for a week. This is tantamount to the beginning of the COVID shutdown. And it is, again, I can't, Texas is just a massive economy and it contributes so much. And so many people have moved to Texas as well. Companies have moved to Texas and they're all getting a very rude awakening about what neglecting infrastructure investment, how that can turn out when you have an act of God. Basically turn a state into a deep freeze, which is, that it won't be coming out until Saturday or Sunday of this week.
You mentioned infrastructure. You feel this could have been prevented?
Oh my gosh. I mean, some of the damage would have been done anyways. We're a state that is prepared and accustomed to 100-degree heat for prolonged periods of time. But the level, the electricity grid, the lack of investment in infrastructure in Texas it's manifest, and you have to wonder if the Biden administration will hopefully get a wake-up call that the calls to improve the nation's infrastructure are critically important right now. Politics needs to be set aside in order for progress to be made on this front going forward.
Some people are calling it a humanitarian crisis there. You think that's exaggerated?
Not at all. No, not at all. I know families who their homes have flooded and they've moved in with their in-laws and their in-laws' homes have subsequently flooded. These are people with, this one particular family I'm talking about has a newborn and literally no place to go. The hotels themselves have flooded. A friend of mine died because he didn't have electricity for 3 days for his CPAP machine. So it is, the streets are iced over. We don't have the trucks, the salt, the sand to deal with this as a colder climate state would. So there, again, the humanitarian aspect, as you say, that aspect of the story is going to be told for years and years to come.
Incredible. Is there anything that could be done now that isn't being done?
Well, Governor Abbott, I don't always see eye to eye with his politics, but, in the aftermath of massive hurricanes like Hurricane Harvey, you saw tradesmen come from other states all around the United States. You saw them migrate down to the areas that were hurt by Hurricane Katrina, Hurricane Harvey. That's what we need right now. We need, and actually he has taken away the licensing headaches for out-of-state plumbers, for one example. So what we need right now are donations to local Red Cross chapters, as well as any plumbers, any electricians, anybody of that ilk who's in an area of the nation where there's not enough work for them. We can certainly put them to work down here, starting to repair all of these countless homes that have been utterly destroyed by this.
Wow, I can feel the distress, Ms. Booth. I really, really feel for you guys there. Wow. All I can say is best of luck. Keep strong. Eventually it will come through. We'll keep watching anyway. Ms. Booth, thank you so much for the update.
Thank you. Take care.
Breaks my heart, really. NTD's Patrick Hayden speaks with a hedge fund manager and the author of The Energy World is Flat, Daniel Akaya, about what the Texas freeze means for energy around the world.
The big freeze in Texas is becoming a global oil market problem. US industry execs and traders say 40% of national oil production is now offline. Economist Daniel Lacalle deals with energy portfolios in the financial space.
Certainly, what we're seeing right now is the impact of both the OPEC cuts that we saw recently that Saudi Arabia was going to reduce further the output, but also the challenges of the U.S. shale industry to put barrels into the economy because of the extreme weather conditions.
He says we've seen severe weather conditions like hurricanes shut down production before, but it usually comes back rather quickly. Although this is a short-term issue, it could impact in the mid-term. But he says this is about more than just the weather.
However, it is also important to understand that the investment in the oil infrastructure network was extremely weak in the past 5 years because of the weakness in oil prices. So the challenges that we are seeing right now add up to an underinvested industry.
He says the shift in focus to renewable energy has left the oil industry behind, and now the economy and consumers are feeling it.
The oil industry in general has been very aggressively attacked by the media, by politicians, and has underinvested in the past years because of this global change in perception of where money should go in terms of capital expenditure in the energy industry.
To make the industry stronger, long-term investment would need to go into oil exploration and production. Patrick Hayden, NTD News.
And key players in the Gamestop saga are testifying before a House committee today. Lawmakers want to know if the wild swings in GameStop's stock price show the stock market structure hurts small investors. GameStop shares unexpectedly soared 1,600% in January to almost $350 a share. It's since crashed back to $42. Most describe the saga as a massive group of at-home retail investors versus big Wall Street hedge funds who had bet against the stock. Some also believe big institutional investors were involved as well. Congresswoman Maxine Waters heads the Financial Services Committee. She's a well-known critic of Wall Street and says the face-off shows many Americans feel the system is stacked against them and that Wall Street always wins. But Republican Patrick McHenry says Washington shouldn't use this as an excuse to regulate the markets even more. Lawmakers also want to know why trading app Robinhood limited trading on some of those volatile stocks during the frenzy. Its CEO defending the decision today.
Robinhood Securities put the restrictions in place in an effort to meet increased regulatory deposit requirements, not to help hedge funds. We don't answer to hedge funds. We serve the millions of small investors who use our platform every day to invest.
Robinhood takes from the rich to give to the poor, right? I think that's what he's trying to say. Yeah, and Vlad did apologize to his customers. He says Robinhood is doing everything it can to make sure this never happens again. And also at the hearing is Roaring Kitty, aka Keith Gill, aka Deep Effing Value. He earned a handsome profit and a legion of online followers, making the case for GameStop shares on Reddit and YouTube. Became quite a star. But he says he's just an individual investor and was interested in GameStop because it was undervalued, not because he wanted to push investors to the stock to influence the market. He says he'd still buy the stock at this price.
The idea that I use social media to promote GameStop stock to unwitting investors and influence the market is preposterous. My post did not cause the movement of billions of dollars into GameStop shares. It is tragic that some people lost money, and my heart goes out to them. But what happened in January just demonstrates again that investing in public securities is extremely risky.
Citadel CEO Ken Griffin also testified. Citadel is one of the biggest hedge funds and one of Robinhood's biggest customers. It stepped in with a few other funds to rescue Melvin Capital after it suffered billions in losses in its GameStop bets. What a saga. And then as the frenzy escalated, the SEC says it would examine the trading restrictions Robinhood and other online brokerages imposed. It's also looking into possible stock manipulation by the Reddit crew and the role that short selling may have played in GameStop's extreme price swings. What a saga. And stocks fell today as investors shifted out of big tech names, and a rise in jobless claims, have some information on that in a moment, pointed to a fragile labor market recovery. The Dow fell 120 points, 0.38%. S&P 500 lost over 17 points, 0.44%. The Nasdaq dropped 100 points, or 0.72%. I think that's 3 days in a row for Nasdaq to fall. Walmart slid today after it missed quarterly profit targets. It says sales growth will slow this year. Apple also fell. It's down 4% this week. Bitcoin is in consolidation mode after hitting a record high of over $52,000 on Wednesday. And the Federal Reserve isn't even thinking about raising its target Fed funds rate right now. It wants to keep money as cheap as possible and hopes people will take it and stimulate the economy. But the yield on U.S. Treasuries is rising, and that poses a problem for the Fed. Joseph Trevisani, a senior analyst at FX Street, says the yield on the 10-year Treasury affects things like mortgage rates, car loans, and other commercial loans much more than the Fed's fund rate. And it's these type of commercial loans that the Fed wants to keep cheap. They'll keep the economy moving and people employed, at least until we have to face the fact that we're drowning in debt. Artificially cheap money destroys the feedback loop for what is efficient and what is wasteful. So asked Trevisani, what'll happen if this goes on for years like many people are expecting?
Well, I think that, central banks have a reputation, I think, that outstrips their actual ability to control the economy and to, if you will, support the economy. After all, the Fed and other central banks have essentially one tool for dealing with the economy, and it's a very blunt tool. It's interest rates. Whether it's the Fed funds rate, whether it's a bond purchase program now, whether it's what the Bernanke Fed called quantitative easing, it's all the same. It's all manipulation of interest rates. And the problem, I think, for an economy is that the longer, we'll put it this way, the economy habituates to low interest rates, to zero rates. And they provide a poor signal for the financial cost of doing business. They permit bad companies to remain and get loans. And they also encourage market speculation because it is easier to obtain money to use in such endeavors. So keeping rates at a low, at this zero bound, I think, is a really long-term detriment to the economy. And if you want to look at the prime example of that, you can look at Japan, which has had zero rates for nearly, close to zero rates or zero rates for nearly a decade. And the Japanese economy has underperformed by its own standards and certainly by other industrial economies over that period and for longer. So I think it is a problem for central banks and their economies when you get locked into these zero rate regimens.
And on that point you made about kind of poor signals and allowing maybe inefficient businesses, unprofitable businesses to stay in business. Right. How about when we add in these fears of inflation? Does this even add to this concern?
Well, it certainly sets the stage. I mean, there was an interesting, if you remember, in the early part of the financial crisis, when quantitative easing was pushed, and it was a brand new instrument. It was something the Fed hadn't really done before. I mean, they had done it before, but nothing on that scale and permanence. And there was tremendous consternation that this would fuel a return to rampant inflation. What we found out is that it didn't happen. And it didn't happen because demand was low for most of the time. And because the pressure on prices, especially consumer goods, from globalization put a real cap on that. So have we moved to a situation where this time the amount of liquidity provided will create inflation? If we looked at the PPI that just came out a few days ago, it was much higher than expected. You had 2% for core PPI, I believe, in January. That's a very high number. So is it possible? Yes. I think that what is necessary is, or what would be required, shall we say, would be a return of demand. I don't think that simple liquidity, whatever it's chasing, right now it's largely chasing asset prices, chasing equity prices, chasing housing prices. It was chasing gold, it's now chasing Bitcoin, and many of the other instruments where people are looking to make money. So that's where the liquidity is chasing. Is there inflation in assets? I would say absolutely. But it won't really hit the consumer market until you get a return of demand and firms feel that they can regain some pricing power, which hasn't really happened yet.
Very good. Joseph, a lot to think about always. Thanks so much.
My pleasure. Thanks for having me on.
Well, the Fed has a tough job fixing the labor market, if they really have the power to do that at all. The Labor Department says another 861,000 people filed for unemployment benefits for the first time last week. That's nearly 100,000 claims more than economists had predicted. The number is even higher if you include people filing through the Pandemic Unemployment Assistance Program. More than 516,000 Americans filed for PUA benefits. That brings the total of first-time claims filed last week to 1.4 million. But there is some positive data too. A new Conference Board survey shows that only 12% of CEOs think they'll have to cut jobs in the next year. That's down from 34% in the prior period. Also, nearly half of them plan to expand their workforce, up from 33%. It's important to stay positive anyway. Still to come. Facebook removes Australian news sites and Australians are angry. Why the fisticuffs? And California shutdowns make theme parks and businesses want to leave. Experts say convention centers might be the next to go. That and more after the break.
It's just clear as day. The media, whether it's broadcast, cable, or print media, has become extremely biased. And I started looking online for alternative ways to get information. And I saw an ad for a free trial. And I looked at it and I said, Epoch Times. I mean, come on, this is end of days type of stuff. I mean, what are they going to be talking about here? And I said, well, it's a free trial. Let me dig in. Is it giving me both sides? Is it giving me an objective point of view here? I have looked for opportunities to see where they might be biased, and I don't find it. It has given me a level of trust in media that I didn't think I'd ever get back. I love the Epoch Times because it has renewed my faith in the idea that a reliable, responsible, non-biased source of information is available. And I can say that I love it because of that.
Australians woke to empty news feeds on their Facebook pages this morning. Facebook had removed all the news content. And even the Treasurer was surprised. He said Mark Zuckerberg didn't warn him about it when they spoke over the weekend. About this looming media law. NTD's Patrick Hayden takes a look at what's going on.
Facebook has blocked all media content in Australia. It's a surprise escalation of a dispute with the government over paying for content. Australians are criticising the move.
Facebook was wrong. Facebook's actions were unnecessary. They were heavy-handed and they will damage its reputation here in Australia.
But Facebook didn't just shut down news sites, it also shut down government health sites.
Their decision to block Australians' access to government sites, be they about support through the pandemic, mental health, emergency services, the Bureau of Meteorology, were completely unrelated to the media code, which is yet to pass through the Senate.
The health minister says it's outrageous and unacceptable.
We expect that Facebook will fix these actions immediately and never repeat them again. This is an assault on a sovereign nation. It is an assault on people's freedom, and in particular, it is an utter abuse of big technologies, market power and control over technology.
One Sydney resident agrees.
I think Facebook banning news is terrible, actually. I do use Facebook. It seems to be a catch-all, and I can get all of my news in the one spot, so it will really impact me.
By mid-afternoon, Facebook restored many government pages, but several charity pages and all media sites remain dark. One thing is certain, if Australia passes the new media code into law, the world will be watching to see what happens next. Patrick Hayden, NTD News.
Brings a whole new meaning to big tech. And California's Disneyland still hasn't reopened yet. And under the governor's reopening plan, doesn't look like it's going to reopen anytime soon. NTD's Zach Lee spoke to a local travel expert about the impact.
California's Disneyland has been closed for almost a year. It's devastating to Anaheim, where the theme park is located. The CEO of Visit Anaheim, Jay Burress, says hotel occupancy rates are usually at 90%, but now they're down to 25%.
We are so dependent on large group activities, Disneyland Convention Center, Honda Center, Angels games, that is all cut out. That's all shut down. And so that has kind of affected our destination much more than many out there.
Last week, Disney said it might move part of its California operations to Florida.
I guess people know they're open, and they know they can go down there and go to Disney World and go to the theme parks and enjoy the sunshine and do things in there, and we could do all that here. So unfortunately, we may be losing out not just on the immediate traveler, but potentially on the future traveler as well.
And it's not just theme parks. Burress says several large convention centers are thinking about leaving California too. Ongoing shutdowns means conventions are being canceled, and it's hitting the hospitality industry hard.
So you look at a lower rate at the hotels, which means a lower tax, occupancy tax coming in that funds the city's general fund, which funds the city services going out to the city. So the city is, that lack of revenue, we've never seen anything like that before.
Burress says the city lost 50% of its revenue over the last year. And with the drop in tourism, hotels and restaurants are disappearing as well. He said the impact could last for a decade. Reporting by Zach Lee, NTD News, Los Angeles.
Still to come, Tesla cuts prices for 2 models. Find out which ones and how much cheaper they are now after the break.
Why are millions of Americans moving their money into gold and silver? It's simple. The world has never been more unpredictable. The biggest economic crisis we've faced since 2008, and a government that's about to print trillions and trillions of dollars. That's why so many Americans are turning to gold and silver to protect their nest egg. American Hartford Gold is a trusted name to help families to safeguard their wealth. With an A+ rating from the BBB and 5-star ratings on the biggest review websites like Trustpilot and Google, American Hartford Gold can help you convert any qualifying IRA or 401k into precious metals. Or they'll help you to easily purchase physical gold and silver and deliver straight to your doorstep. Learn how you can protect your wealth with gold and silver today. Get this free 2021 information guide. Call 866-893-1493 or text TV to 65532.
Tesla updated its prices for the Model 3 sedan and Model Y SUV yesterday. That includes price cuts for both base models. Now, the cheapest Tesla starts around $37,000. The car maker is trying to make some models more affordable at a time when legacy automakers try to make inroads in the EV market. Although it lowered the price for its cheaper variants, its prices rose for the most expensive ones. Those are now $56,000 for the Model 3 and $61,000 for the Model Y. And Google Map users, you got to listen up. It could be a little easier next time you need to pay for parking or a train ticket. Google's new feature allows you to bypass parking meters and train ticket machines. All you have to do is connect your Google Maps account with your Google Pay wallet, and the new perks can save you time and save you from having to touch public surfaces. Big plus for some people right now. For parking, the company has partnered with 2 tech providers, Passport and Park Mobile. Both will link Google Maps to street parking meters. And for public transportation, Google says the Maps app can connect with more than 80 transit agencies around the world. That's the latest business updates for today. You can still catch NTD Evening News at 6:30 p.m. Eastern. But for NTD Business, that's all for today. Thank you for watching. We'll see you tomorrow.
Don't let YouTube decide what information you get. That's your choice. YouTube is deleting our videos and cuts you off from a source of honest reporting. Make sure you don't lose access to NTD's news content, and take a quick moment to subscribe to our newsletter so no matter what happens here, you'll keep your access to a trustworthy news source.